Hello everyone and welcome back to another video. If you have not already, please do consider subscribing. I see all these subscribers that I get. I see you all and I can't thank you enough. I appreciate it so much. Alright, let's get right into this video. This is NVIDIA, and this is a great semiconductor chip stock. This is like visual graphics. They make things that go into video games and all kinds of like AR, VR kinds of stuff. This is a big play on that. They have a strong buy rating with 27 buys and 1 hold out of 28 total ratings. And as of right now, today, the price went up $18 or about 2.49% as of June 22nd, 2022. But even with this price target, average price target of 746, there are a few highs of about 900, which is pretty crazy. Like a lot of people think that that could hit easily, and we'll see. We'll see if they're right. Stock analysis, this says that it is a 9, which is a very, very good score. This is a 9 out of 10. This is a very bullish, very positive stock that analysts have appeared to like a lot. Now let's check out their top line revenue. Top line revenue has grown about 1.5%, 1.6%. Sorry, 160%, I should say. That's crazy. 1.6 times, sorry. That's crazy. Like, they've basically tripled revenue in 6 years, from 2016 to 2021. Their fiscal year ended on January 31st, 2021, and they, like I said, have basically tripled their revenue since 2016. And their net income is also very strong. It's about 4.3 billion. It is the highest it has ever been. And that is huge. That's like a 25% profit margin. That's nothing to sneeze at. That's really good. And this is still a growing company too. I think again, even with their stock split announced a 4-for-1, I believe, in July, I still think that this is going to be well worth in the thousands one day pre-split. Let's look at the balance sheet. So NVIDIA recently, I think that they've acquired a few companies. Please do look into that for me, because as you can see, the cash went from about 10.9 billion in 2020 to about 847 million in 2021. As we just saw, they have a net income of about 4.4 billion a year, so they can definitely stack cash and replenish this cash very quickly, and we'll take a look at that in the cash flow statement. But I believe that they're buying or have bought ARM, which is a huge United Kingdom, same kind of play, chip, AR, VR kind of thing, graphics. So I believe that's why this went down, but please do check in on that and correct me if I'm wrong, see what they have made as far as acquisitions. If we go to total current assets, they have about a total of 16 billion, and total current liabilities is about 3.9 billion. This is they have a smart CFO. This is exactly what you want to see. And this is absolutely incredible. That is one of the strongest current ratios I've ever seen. Working capital is very, very strong. They have about 5.9 billion in long-term debt, which has grown, that has ballooned. But again, that's nothing like that we're concerned about, honestly. Like, we know that they can pay down debt and that they're good for it. We'll even look and see if they've paid down debt recently in the cash flow statement. But, total assets versus total liabilities is still very strong, very, very strong, more than double. They have more than double total assets compared to total liabilities. Now let's look at the cash flow statement. In the cash flow statement, we can see where it starts out with the net income, and then let's go straight to long-term debt issuances. They issued about 4.9 billion in long-term debt over the course of 2021, their fiscal year. And looks like they don't really repay, actually. They haven't repaid in quite a while. And it also looks like they haven't really done any buybacks recently either. That's interesting. They don't issue new shares and they don't really buy back shares. So that throws a wrench into things. At least they do pay a dividend. That is nice. And let's see what their free cash flow is. So yeah, this is negative because they've done so much as far as trying to make acquisitions. See, we have 8.5 billion in acquisitions, but overall, they do have, in general, a positive cash flow statement, and they have had a positive cash flow statement in the past. Let's look at a portfolio of NVIDIA. So NVIDIA came public in February 1999, so the info that we have is from January 2000 to May 2021. And if we take a look, $10,000 invested at its IPO date, or with the data that we have from January 2000, would be worth about 1.8 million today. So in about 21 years, it took you to get about $10,000 to 1.8 million. That's a 27% compound annual growth rate, and that's really, really good. This is like up there with like the Microsofts and the Apples as far as like a 20-year return span. Now let's check out the annual returns. And if we can see, 2018, a lot of stocks got hit pretty hard. NVIDIA got hit really hard though. But if we take out 2018, basically from 2013 all the way to 2021, so about 8 or 9 years, this has grown double digits every single year. That is why we've seen, it become the monster that it is at, $755. That's pretty incredible. This doesn't happen very often. You might get single digits, not even like triple digits twice. That's very rare, and that happened in 2016 and 2020. That's not an anomaly, and we could definitely see that happen again. Also came close in 2017. So anyway, this is how the rich get richer. They invest in things like NVIDIA or ETFs that invest in NVIDIA. So if you guys like this video, please do like it, and please do subscribe. Please do consider subscribing, and I'll see you soon.